Ladies and gentlemen, good day and welcome to the Gufic BioSciences Ltd investor call for Q3 FY2024-25. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Amisha. Thank you, and over to you, ma'am.
Thank you, Sagar. Good evening and a warm welcome to everyone. Today, in this call, we have with us Mr. Pranav Chokshi, CEO and Director, Mr. Devkinandan Roonghta, CFO, and Mr. Avik Das from Investor Relations team, and who will give the overview of the business and financial performance of the company and take questions if any. Before we begin, I would like to say that some of the statements that will be made in today's discussion may be forward-looking in nature. It is subject to unfortunate risks and uncertainties, and the actual result could materially differ. The company undertakes no obligation to update or revise any forward-looking statement, whether as a result of new information or future events or otherwise. I hope you all must have received the investor presentations that we have posted on the stock exchange as well as our website. We'll now begin the call with the opening remarks from Mr. Avik, followed by a financial overview from Mr. Roonghta. Thereafter, we can have our forum open for the interactive Q&A sessions. Over to you, Avik.
Hello. Good evening and welcome to Gufic BioSciences third quarter conference call. We appreciate you joining us today as we share key updates on our performance, strategy, and vision for the future. As always, our focus remains on driving innovation, expanding our market presence, and enhancing the lives of patients through high-quality and scientifically driven pharmaceutical solutions. So I'll begin by discussing some of the key milestones from the quarter that are contributing to Gufic's continued evolution. So first, I'd like to start with our Criticare division, which remains a cornerstone of our business. Our division continues to solidify its position as a trusted partner for hospitals, offering a comprehensive portfolio of advanced injectables in antibacterials and antifungal space. As infection trends evolve and antimicrobial resistance becomes an increasingly urgent issue, we are addressing these challenges head-on with cost-effective and scientifically backed solutions that not only help reduce resistance, but also optimize patient outcomes in the critical care setting. In the quarter that went by, we've taken several strategic steps that underscore our commitment to responsible antimicrobial use. We launched an awareness campaign focused on UTI management, which underscores the importance of rational antimicrobial prescribing. This initiative is critical, especially in India, where burden of UTI is high, and antimicrobial stewardship is essential in curbing the rise of resistance. Additionally, we continue to strengthen our market presence through participation in leading medical forums, including Mahakritikon in Pune, ISCCM in Bangalore, where we engaged with key clinicians and hospital networks. These interactions allow us to stay at the forefront of infection management, share the latest insights, and ensure that Gufic's offering remain aligned with global best practices in treating ICU and sepsis-related infections. Moving on to Ferticare cluster, we continue to grow this cluster in the entire ERT space. As the fertility landscape grows more complex in India, our focus on scientifically superior and process-driven solution is helping IVF practitioners navigate increasingly challenging cases, particularly in treating poor responders and patients experiencing multiple IVF failures. These are areas where solutions have traditionally been scarce, but Gufic is providing targeted treatments like Guficin Alpha and Supergraph to directly address these challenges. One of the most exciting developments this quarter is the progress we've made in Guficin Alpha. It's a breakthrough treatment for recurrent implantation failure. We believe this is a game changer in the fertility space as RF continues to be one of the most persistent challenges in ART. Gufacin alpha leverages thymosin alpha, a hormone with over 2,000 published studies. It's a molecule accepted by US FDA, has the DCGI approval, and it's been scientifically validated therapy, uh, uh, and it has been validated by independent practitioners, some of the leading chains in India. And we've come up with the conclusions which further back our findings that this enhances uterine receptivity and improves embryo implantation. Uh, Along with that, in parallel, Supergraph is India's first ultra highly purified HMG. This is setting a new benchmark in IVF stimulation. This next generation purification technology ensures better ovarian response, lower dose requirements, and improved success rates, especially in the poor responder category. This is further strengthening our leadership in this space. These innovations, along with early clinical validation, has positioned us as a trusted partner for IVF centers and fertility specialists, especially the ones that are not seeing good results in the poor responder category. Now let's talk about Stellar and Spark division. Both divisions are driving growth in key therapeutic areas such as orthopedics, gastroenterology, women's wellness, and reproductive health. Stellar in particular is making strides with its vonoprazan launch, which has gained strong uptake in the gastroenterology as a PCAB, potassium competitive acid blocker, helping doctors manage acid-related disorders more effectively. Looking ahead, we are also excited about Gufic P. It's a new combination therapy in orthopedics designed to address musculoskeletal pain with enhanced anti-inflammatory and analgesic effects. Additionally, Stellar is expanding its reproductive health portfolio, including antioxidants to support both male and female fertility, making an important step in Gufic's effort to cater to the growing infertility management market. Meanwhile, the Spark division continues to leverage scientific engagement and product diversification to strengthen its presence in specialty segments while actively contributing to patient outreach and education through our initiatives in gynecology and ENT care. Next, I want to highlight our healthcare division, which remains committed to bridging the gap between traditional Ayurveda and modern pain management solutions. As more patients seek integrated therapies, Gufic is offering clinically validated Ayurveda-driven solutions that align with global trends in natural and holistic care. Gufispon, for example, has emerged as a preferred non-surgical solution for cervical spondylitis, an area where traditional treatments often fall short. With increasing cases of musculoskeletal conditions driven by modern lifestyle, Gufispon offers a natural, effective alternative to invasive procedures. Additionally, our Salaki range, which continues to grow in popularity, has become a leader in the joint care market, positioning us as a key player in the natural anti-inflammatory therapies. We are also seeing tremendous engagement through initiatives like bone mineral density screenings, which we've done. This fosters early diagnosis and preventive care for conditions like osteoporosis and arthritis. Lastly, I'll talk about Sparsh division, which has made significant strides in expanding its product portfolio and reinforcing its direct-to-hospital model. This quarter, Sparsh expanded its offering with select contrast media. As we all know, contrast media is a specialized product for diagnostic imaging, and few companies in India are providing this product. This additionally significantly enhances Sparsh's competitive position and expands its footprint into critical care and the fast-growing diagnostic imaging market. By directly addressing the needs of mid-sized and smaller hospitals, Sparsh continues to deepen its relationship with healthcare providers, positioning itself as a key partner in even now diagnostic solutions. This strategic expansion allows Sparsh to capture larger share of hospital budgets, further reinforcing our strategy in the direct-to-hospital model. Finally, our international division continues to strengthen its position with key product approvals across global markets. The most recent approvals in regions like Sri Lanka, Lithuania, Ecuador, and Kenya reinforce our commitment to expanding our global footprint. These approvals are essential for opening doors to new markets and increasing Gufic's presence as a leading supplier of high-quality pharmaceutical products worldwide. As we continue to grow our presence in regulated markets, these strategic registrations pave the way for future opportunities, especially coming out of our new plant at Indore, which has now commenced production. Thank you all for your continued trust and support in us. I'll now hand over the call to Mr. Roonghta for detailed discussion of our financial performance, after which we'll be happy to take your questions.
Thank you, Avi. I will just highlight the financial results for Q3 of financial year 25 versus.
Sorry to interrupt, sir. You're sounding a bit distant.
I'm just highlighting the financial results of Q3 of financial year 25 versus Q3 of financial year 23-24. The total revenue for the operation for the financial year 24-25 Q3 is 207.8 crores compared to Q3 of financial year 23-24 201.8 crores. The EBITDA for the current year financial Q3 is 35.8 crores compared to the previous Q3 of financial year 24 36.9 crores. The EBITDA margin for the current Q3 is 17.23% compared to Q3 of last year 18.29%. The profit before tax for Q3 of financial year 25 is 26.3 crores compared to Q3 of financial year 24 29.6 crores. The PBT margin for the Q3 of financial year 25 is 12.66% compared to Q3 of financial year 24 14.67%. The profit before tax for the Q3 financial year is 19.4 crores compared to Q3 of financial year 22.3 crores. The tax margin for Q3 of financial year is 9.34% compared to Q3 of financial year 24 11.05%. Now I am highlighting the financial results for 9 months of financial year 25 versus financial year 24. The total revenue for the 9 months of current financial year is 614.8 crore compared to 616.7 crore last year 9 months. The EBITDA for current financial year 9 months is 111.6 crore compared to previous year 9 months 112.9 crore. The EBITDA margin for current 9 months is 18.15% compared to last year 9 months 18.31%. The profit before tax for this current year 9 months is 83.6 crore compared to 9 months of last year was 88.6 crore. The PAT margin for current 9 months is 13.6% compared to 9 months of last year 14.37%. The profit before tax for 9 months of current financial year is 61.9% compared to 9 months of last year 66.1%. The PAT margin for current 9 months is 10.07% compared to 10.72% of last 9 months of financial year. Thank you.
We can now start with the question answers round.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to register for a question, please press star and 1 on your touchtone phone now. Participants, you may press star and 1 to ask a question. Our first question comes from the line of Nayan Tapadia, an individual investor. Please go ahead.
Hello.
Yes,
Hello.
sir, please go ahead.
Hello.
Yes, Nayan sir, your line is unmuted. Please proceed with your question.
Yes, congratulations for the stable set of numbers for the Q3. I would just like to know what is the top line we will do from the Indore facility. Like the revenue is still not seen from that facility because it is a new facility. What is the top line we will have from there?
So Nayan ji, Pranav here. How are you? Thank you for your call. So I'll answer your question. Firstly, sir, the numbers are not something which we would have predicted. So even in spite of your congratulations, we are still working hard to change that. I'll give you a little bit of a logic also behind that why the numbers are. First, let me answer your question for Indore. As we have mentioned also in the earlier presentation and also in the announcement, the production of Indore has started from October 2024. And the first revenues were captured to the tune of 6 crores in this quarter. The total potential of Indore, of course, is much higher. But you can just imagine that Navsari right now helps us to contribute to this 800 crores. And with Indore coming in, Indore has almost 1.5 times capacity plus 2-3 new product lines also of ampules and sustainable formulations. So the potential of Indore can be considered 1.5 times Navsari with all these things, and that is the highest potential. But of course, it will be a gradual increase which will happen once the regulations start coming in. The validation data has been complete, like I mentioned, in October. And then the first set of products started being manufactured, and now more and more validation will get complete, and more orders and more clients will approve us. Followed by, there will be, like WHO GMP has just been finished, and we have achieved that in the month of January. And now we were going to go for EU down the line, along with other countries' approvals also. So we will foresee growth happening of around 25 to 30% capacity utilization in the next year, and then followed by 50 to 60% the year after that.
Oh, nice. Okay, sir. Sir, one more is you had attended the CPHI.
Yes.
CPHI.
Which one, sir? The one in
Delhi and Saudi Arabia.
Yes. Yeah.
So how was your experience there? Like, are you able to?
So CPHI is always good as long as it gets translated into business is good. But yes, right now we will be attending a lot of exhibition and conferences. We also attend a lot of. Our team is also going to DCAT next month, in March also for the US business. So we keep on attending. The response has been good, but till it translates into numbers, business, top line, bottom line, we are working very hard for that.
Okay, so one more, sir. Regarding debt, are we going to take more debt, or it is now like for time being this will be the?
No, this is a peak debt, sir. I think Roonghta sir will answer this question actually better than me, so I'll hand it over to him. But according to me, it's a peak debt, and there'll be till Indore starts generating and we become cash positive,
Sure.
We will not be. But again, Roonghta sir, can you answer this, please?
Yeah, definitely, sir. Yes, sir. We are having two types of loan. One is term loan. Term loan is we have taken for Indore as well as certain loan from Navsari. The term loan today outstanding is around 155 crore rupees, and working loan financial limit is 200 crore, but utilization is around 80%. So today outstanding is around between 300 crores, and I don't think there will be any possibility of further increasing in the loan. I think this is a peak loan, and over a period of time after the cash generation from Indore, the loan will come down.
Okay. That's it from my side, sir. Congratulations for yours.
Thank you. Next question comes from the line of Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
Yes, sir, but there is an echo from your line. So if you are using speakerphone, may we request to use handset, please?
Sure. Is it better now?
Much better, sir. Please go ahead.
Yeah. So Pranav sir, hi. Thanks for the opportunity. So in your opening remarks, you mentioned about several new products that we have launched in Ferticare and similarly on other segments. So if you could just broadly help us understand what are the potential and at what stage are they in terms of their market launch, and what is the kind of response we are getting, and how much of a revenue can they add to, say, in quarter 4 or FY26?
So there are two things. So the first thing is in Ferticare specifically, I'll answer since your question is for Ferticare. We have launched one Gufic in Alpha, which is for recurrent implantation failure. Right now the product is already launched since May 2024. We had started with a patient pool of around I think 80 patients in the first month, and now we have reached a total patient pool of per month of around close to I think 300 or 330 I think patients per month. So this is something which is more of concept billing where there is hardly any other solution available. So we're working with the I would say the FDA and the CTRIs also to do a phase 4 side by side, because it's already an approved product. So we're trying to get it approved for a new indication, and that is where we are doing some trials. So once the trials are also done parallelly, we will see more and more uptake, because then it becomes part of the protocol going forward. So recurrent implantation failure are normally 15-20% of the IVF cases right now. So it's quite a big market. There are conventional other products used, but focusing on immunology as one of the option where there is inflammatory parameters by which certain times the implantation is affected is something new, and that's why more scientific data is being done. So this is the case and the current status of that. Our next product is Supergraph, which is I think doesn't require so much scientific, but we are of course doing more of sampling and product pool. That is getting a much faster response because it's a more highly, I would say, a super purified version of HMG, which is anyway a conventional option used by doctors in the field of infertility. This product is taking higher fraction. I mean, it's taking momentum much faster because it's a well-established concept and it's a much more superior product. So this product is actually increasing by almost 8 to 10% month over month. So we hope that this would be one of our main anchor products, not only in Q4, but from the year to come also. So the total market size of HMG in India is around 484 crores. This is of course as per December AVAX, what I'm referring to. Out of that, this is MAT numbers. Out of that, we have a Puregraph, which is already around 25 to 26 crores. We feel if Supergraph handled efficiently and done properly, Supergraph can be close to a 10 crore brand in the next year. So that is how we are looking at in step one. But down the line, we seeing the 484 crore market potential, we hope that we can start to go to at least 10 to 15% of the market share in the next 2 to 3 years. So we will see a small use happening and then directly going from 10 to 25 and 25 and beyond. Because we right now have only around 22 people promoting this. Down the line, we have plans to gradually bring it to the other divisions also once we know that enough data and enough endorsement of doctors is there, and then we take it to a higher audience. So that is the second product. And of course, there are others, but let me focus on these two right now, which is going to be the main focus products of Ferticare.
Got it. And so similarly, for other divisions, you were, I'm sorry, I couldn't take a couple of names because I missed out on the exact names, but I think in critical care and then in Stellar also you were mentioning a few of the launches. So
Yeah.
this commentary was quite helpful, how you explained for Puregraph and Supergraph. Similarly, if you could explain us for Stellar and critical care.
So critical care, the issue what we have faced not only in critical care but for also for HCG this year, right? There are around 7 molecules of Gufic which are not only in part of our domestic marketing but even for export and even for contract manufacturing. They have faced sort of a price erosion. So why I'm giving you this factor to answer your question is because there are products like ceftazidime avibactam which was launched and there has been a price erosion. And then there has been now this combination of Astrium avibactam we are working on. So that is still yet to start the clinical trial. So these all products are adding value in the last 3-4 months. But then we have a conventional set of 7 molecules who are 20-25% of our revenue generators of last year, where the pricing is almost down by 60 to 80%. So when I give you these new numbers of perspective, always just keep that in mind. Also, there are certain products where the API price has gone down, other things have gone down. So that is why also we have seen the thing. So in critical care, to answer the question specifically, we have now Astrium avibactam which is planned. Before that, dalbavancin was launched. Dalbavancin, we have again we again follow a patient pool mechanism where we hope that it becomes close to a 8 to 10 crore brand. Aztreonam is something which we have just started the DCA process, so that will be, the revenues will be captured in the next 6 months. However, ceftazidime avibactam, where we have known for and has been thinking that as, even though there has been a price erosion by almost 80% of the price what we used to sell last year, but the quantities have increased by almost 30%. So even though we are a little bit net down, the growth is still there. So like that, there are I'm just giving you two molecules example of each division. In botulinum toxin is a different thing in the aesthetic division that is having no price impact or nothing. So that is actually growing, again, like I said, the base is small, but the growth has been almost another 60-65% year over year. But the base being hardly in those, I think 10-15 crores in aesthetics and are remaining around 8-10 crores in the neuro space. The base hardly increase of around 10 crores increase is not showing overall in the entire company's revenue. So that botulinum toxin followed by fillers to be launched in the next 3 to 6 months will be the growth, I would say, factors in Aesthaderm. And then we have Sparsh. But then I can keep on going on because there are too many divisions, but I'll focus on the top 3 divisions, that is the Ferticare, Critical Care and Aesthaderm, where I have given you answer. If anything more is there, please write to us. We'll give you a specially division-wise feedback for all the remaining 4 divisions also.
Sure, sir. Be really helpful. I'll reach out to the team. I'll write to Avik and seek these details. Sir, secondly, on the Indore side, in terms of the expense, are we left with any more expenses, or the expenses are already done and just once these trial batches are accepted and the approvals come in, we can scale up?
Yeah, so scaling up will always in pharma and injectable especially take time, because one is of course our domestic business, which we will start immediately. So already you've seen 5-6 crores revenues captured of our domestic business. In the first quarter and in the last quarter, that is Q4, you will see more business where will be more products coming in. Some, I would say, companies have started giving us the authorization to start their CMO business, which we see around Q1 next year. And then by the end of Q1, we will have the EU GMP coming in also, because certain validation will be submitted. So you will start seeing like a little bit of export also by Q3. So you will see that revenue transitioning from baseline to Q4 2025, which will be Gufic oriented. Then from next year, it will be a mixture of CMO opportunities along with export starting kicking in. So that's why the gradually to happen. Answering your question, expenses are all done now. Like Rumta sir also said, we have now only the OPEX, operation expenses, which are happening every month, which will be there. Karke. But in terms of CapEx, I think everything is done.
Okay, got it. And so last one question, and then I'll get back in the queue. So if we look at the longer term trajectory of our operating margins, that has been something around 17 to 19%. While in past, our endeavor or guidance has always been that the model we are working on, that we want to bring out products which are different, maybe in terms of, how they are delivered to the patients, or maybe something or the other we are trying to do. And the intent is to increase our margins. So now with so many of the launches already out there in the market and then few more coming up, when do you see the benefits of increasing margins, reflecting into numbers? Do you see FY26 to be the year?
So I will talk to you what I have limited knowledge about, and then of course I'll ask Rumta sir to come in. But before he comes in, I would like to tell you 2 things from my side. So if you see the gross margins in the last few quarters have anyway improved because of the product mix which is happening, and also because of the increase of UK business and export business. And anyway, there were capacity constraints still last quarter. So that is, I'm saying Q3 2024. So we always had to take a choice between what we do, and sometimes it's not that we could only do the high margin stuff, because we had an obligation to fulfill the domestic contracts also. Now that is about the gross margin. In terms of the other margins, in terms of employee and also in terms of the other expenses, you will see a peak coming for the next 2-3 quarters maximum, because that is where Indore will still have to the revenue of Indore will be catching up to the expense of Indore, which will be anyway full-fledged captured also. So those margins for the next 2 to 3 quarters will be seen on the lower side because of these employee expenses and the other expenses and the depreciations and the interest costs. And then once the Indore revenue starts coming in, which we are expecting, then you will see that line of baseline increasing again of the other, I would say, the EBITDA margins also. Till then, the gross margin should definitely improve. That is what I wanted to make a point, Karve. However, I think, Roonghta sir, you want to add something to what I have missed or something more? Yes.
Basically, if you see our gross margin, that is basically sale minus raw material and packing material, that has improved by around 2% from last 2 years. But because of the increasing in the employee cost as well as other expenses, the EBITDA margin has been come down by 1%. Because of the increasing in the depreciation and other expenses, in near future after Indore startup, we feel that there will be a pressure on the EBITDA margin as well as PAT margin. But after 26, when the capacity utilization of Indore will be pick up, so I feel that the EBITDA margin and PAT margin is going to improve after 26 onward.
Got it, sir.
Thank you. Next question comes from the line of Rahul Girish Shah from Glowstar LLP. Please go ahead.
Yeah, this is Rahul Shah from Glowstar LLP. My question is to Mr. Pranav. Can you give overall Indian lyophilization industry overview and its future ahead, and Gufic's competitive advantage among it in market share? Just elaborate the whole lyophilization industry for me.
Rahulji, if I understood your question right, you want me to talk about the Indian or the global pharmaceutical industry and their perspective vis-a-vis?
No, lyophilization. Lyophilization in particular, how the Indian lyophilization industry is placed, and how is Gufic, what are the Gufic's competitive advantage in among?
Okay, only in specific to the lyophilization, right?
Edge over the competition.
Yeah. So again, I think if you have been following my discussion, because it's a very broad end question, but I'll still try to complete it in the next 2 to 3 minutes. So if you see the lyophilization is just in 10, 15 years ago, it was something which was worthwhile. Now it's become a commodity. So the capacity is something where you can say Gufic is having one of the biggest or the largest capacities now, not only in India, but in the major parts of the world. If you compare it as a single unit, we have a huge capacity. And that is where the advantage comes out. But the advantage of capacity is a small part of the entire, I would say, offerings of Gufic. The product pipeline, the capability of handling complex injectables, and also the wide range of flexibility of having different dosage forms. And then the application of lyophilization of Gufic into botulinum toxin and now future biologicals is something where Gufic's offering is a little bit different than just being a lyophilized CMO or a lyophilized manufacturer. Because so that is where I would differentiate, or I would say this, I would classify or perceive Gufic from an outside view. The Indian lyophilization market overall must be growing in terms of volumes a little bit higher in double digits. Value-wise might be single or higher digits, because that is again because of the product pipeline. But like I said, it's a very often thing, because lyophilization has multiple applications in oncology, in food industry and others, whereas we are focusing mostly as Gufic only in the general antibiotic and intensive care and ICU-based products, along with parenteral nutrition, infertility, and like I mentioned, aesthetics, neurology, and others. So our product segment and the product focus is also very sharp, and we are not into everything what lyophilization is into. But in whatever we are trying to be a dominant player in terms of the pipeline, the capacity, as well as the efficiency in terms of the differentiation products and new drug delivery systems. That's how I would like to classify it. I don't know if I answered your question, but I tried my level best to do it in 2 minutes.
I got an idea.
Yeah.
Thanks very much.
Okay.
Okay.
Thank you. Next question comes from the line of Shirish from TKD Advisors. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Yeah. Hi, my question is for Pranav. Pranav, could you kind of elaborate more on the botulinum toxin revenue which you're probably seeing by FY26, and what are your strategies to grow that?
Sure. So, like I said, I already gave a little bit of hint in the two questions before in terms of the numbers, how I'm looking at the growth of 65%. A little bit changes we have done recently. I don't know if you have been keeping a note on us that we just have got Mr. Vijay Kumar to join us. Right now, this Estedum was actually part of a strategic business unit under a common unit of women healthcare and aesthetics. We just have got two senior members, one senior member from BSV, that is Mr. Rajiv Agarwal, who will be handling infertility as a separate cluster. And then we have got Mr. Vijay Kumar, who had spent more than 6 to 8 years in Galderma, and before that also in, like Dr. Lee's and other companies where they are focused on aesthetics purely. So he has joined me, he has joined us. And along with that, we have a separate team member who is handling the neurocare side of it, or the therapeutic application of botulinum toxin, who has been working in MERS and before that, other neurological companies. So there's a clear-cut demarcation we have done this year from January onwards, because we feel the base has come and now it's time for us to go to the next level in terms of the, getting our activity. Because the UPSMP guidelines have always been there. So we are looking at more and more scientific base and more engagement where, as permitted by the UPCMP, and go for more scientific discussion and create more clinical data in different, I would say, therapeutic indications in the aesthetic space as well as the neuro space, and also focus more and more on training. With Mr. Vijay Kumar coming in, we also have we get a clear-cut, I would say, legacy lead into doctor engagement, because there also what the doctor expects in terms of the cadaver training, what are the multinational guidelines in terms of creating SOPs, also creating protocols, that just makes it much more easier. And also a lot of doctors who used to consider Gufic as a new player would also now endorse us much faster, because then we have a big brand, ex-MNC colleague who's endorsing our brand and bringing them as an offering also. So this is our plans into it, and this is how I again feel that with these factors and these, like I said, clinical data, scientific inputs, and also trials, and also more and more trainings, which have always been our main forte. We invest more than what we earn only in training and development, because we feel someone has to get this category expanded. You can't just keep on. It's not a category where you have to take a market share. We're already number 2. We are after Allergan. But we have to not only increase the market share, but at the same time, we have to increase the overall market size also via category conversion. That will always, category upgradation by doing more and more doctors converted to and equip them with the skills to do these aesthetic as well as neurological techniques. So this will be the way forward qualitatively, and hopefully that will help us in the quantitative numbers which we have envisioned, where we hope that this year we did only 65%, but we were hoping to double. We could not do that, even though we have done the huge amount of investment in terms of category building, but I'm sure that appetite will still continue for us.
Understood. I have a follow-up question, Pranav. So, I pardon me if I've missed something in the past, but do you plan to expand this internationally, trying to capture the East Asia markets or the US?
We do, but very frankly, right now our entire bandwidth is very focused on 2-3 things which are very important. The Indian space. So, once we get into the international space, we had options. Very frankly, there were opportunities also which we had to, but at that time we very frankly put it on hold, because a lot of things our bandwidth would have been used now to create a new infrastructure to then take the product to the international market. So we purposely have stayed away from it. Our next focus is to first get Indore running, get the domestic business a little bit more aggressive along with the help of Indore capacities. And then botulinum toxin, let's focus on the next 1 year at least on the domestic market, bring it to number, because the GCs are very high. And we really feel India is a market which really has to take a lot of bandwidth and work. And then maybe after 1 year, we will definitely look at thinking of the international market, where a new infrastructure will either have to be created or we might need to outsource it from an existing CMO or something. So we can always discuss this after 1 year when we have little bit less things on our mind, and a lot of things have picked up by then.
Understood, Pranav. Congratulations on the good set of numbers. Thank you.
Yeah.
Thank you. The next question comes from the line of Vidit Shah from Spark Capital. Please go ahead.
Hi, thanks for taking my question. My first question was on the new product launches. We've had quite a few of them, over the last 6 to 8 quarters. If you could just help me understand what are the blockbuster ones now that we've seen some sort of feedback come through. What are the products that you believe can be 50 to 100 crores of revenue from the new launches over the medium to long term for Gufic itself?
Yeah, so right now I'll focus on the domestic space purely, because internationally it's a different ball game. So in domestic space, the ceftazidime avibactam followed by dalbavancin are the two products in critical care which I just mentioned some time ago, which have that blockbuster thing. Dalbavancin has reached, only because it's the first time we have launched in even the MNC or the innovator is not here. So we have still reached a basic scale of only around 3 to 4 crores in a year. But we hope that with more and more resistance and other issues coming in with ciprofloxacin and vancomycin and linezolid, vancomycin will have its own positioning. So we feel dalbavancin, I was talking about dalbavancin. Dalbavancin has a potential of going from 3 crores to at least 15, 20, and then eventually more once the positioning and the market acceptance comes up. We also have slashed the prices of dalbavancin by almost 1/3 now, because of the efficiency of the API and all that, to make more and more doctors start using it. So this has a potential value of a high scale, at least 40, 50 crore down the line, if I talk about. Second to be, of course, ceftazidime avibactam, which is already, I think, a 20 crore molecule for us in the last 2 years of launch. January 2023, I think it was launched. So this is going to grow more. Of course, this might little bit be affected by our next launch of aztreonam avibactam, which is right now in DCGI, because that is another having a blockbuster potential, where the entire market size can be around 250 crores. And whoever launches is first right now. Pfizer has just got the approval in August 2024, and we are the first Indian company to apply to DCGI for it. So let's hope how that works out. And once we get the approval, hopefully by next year we can get some feedback. Coming to fertility, I already mentioned about Guficin Alpha, where it will be a little bit of a slow, painful journey, because it's more of science and getting trials done to get the product big. It has the potential to become in that number which you mentioned. And Supergraph. Supergraph already has, like I already mentioned, it's a 484 crore market. Our other HMG is already around 2025, and this potential has itself to bring it to that level. Starting with at least on the first year of launch, it should be 10 crores, and then followed by much more. And then, of course, we have botulinum toxin, where botulinum toxin, both in neurocare and aesthetic space, can be that big enough molecule. So like I said, I will only focus on these 3 divisions right now and tell you more insights about them. Other divisions, we are more than happy to write back. You can write to us and we will give you more about them.
Okay. Understood. No, this is helpful and very detailed, so thank you. The other question I had was on the Indore facility. If you could just help explain if we are tracking the amount of cash burn that is happening currently, and when do we expect this to be breaking even?
Okay, I think this is the cue for Roonghta sir to step in. So Roonghta sir, you will take this question.
Basically, just now we started the production, and for Q4 we are expecting that the revenue can come around 20 crore rupees. From 25-26 onwards, we feel that the revenue should be minimum 150 crore rupees, the additional revenue from the Indore plant. That is our expectation, and depending upon the validation batch approvals as well as the audit by the third party. But we expect the revenue from Indore should be 150 crore in next financial year.
Okay. Sorry, just...
Yeah, I'll ask you a question. I think Roonghta sir did not answer. Roonghta sir, they are asking whether how long would the cash burn last and when would we breaking even?
Breaking even. I think the breaking even will be going to take around 4 to 5 quarters. It will be the fourth quarter of 25-26. I think the break even will be good to come.
Got it. Just sorry, if I could...
Yeah, Indore in isolation, just to clarify that. Yeah.
If I could squeeze in a clarification, in one of your opening remarks, I think you said that you expect the utilization to go up to about 30-40% in FY26. So that would translate to a revenue much higher than 150 crores, like what Roonghta sir said, right?
Yeah, so I'll tell you, there are 2 types of businesses. One is, of course, a CMO business, which only conversion cost is captured. And one is, of course, the third-party business, where, of course, the actual revenue is captured. So initially, before a registration comes in, only the domestic business will be capturing the revenue on a TP basis. Whereas in the first year, we expect a lot of loan licensing work done for MNCs and big companies till our export registrations kicks in. So those revenues, even though has a projected revenue of much higher, because this is purely on the conversion cost space. So there'll be a 50% which will be transfer pricing, and 50% of the revenue, 60% of the revenue will be still CCPC. And that's why that revenue would be a little bit lower, but it's more purely CCPC, not RMPM involved.
Got it. And just the last one. So I guess we ramp up Indore by FY28 to full utilization. Any other capex that we have in mind that we are looking at or contemplating, given that that will also take a couple of years to come up? So what is the management thinking about the next steps of capex?
So 28 will be great if it's done. I think 28 or 29, because like I said, we are very selective and very, I would say, we are very careful what we get into Indore, because it has a US FDA appetite. So just to fill capacities, we might not be just getting anything just for capacity utilization. So 28 to 29, I think time will tell, but our efforts are on to get it done as soon as possible, just to clarify that. Coming to the next point, yes, right now, as of now, if you see, as a company, most of our efforts which have been in the past also in the R&D scale. So we are evaluating post-Indore, maybe something to be done on the botulinum toxin or the botulinum toxin space. Otherwise, most of our work will happen in R&D, where we are looking also at strategic tie-ups, where instead of investing in our own, I would say, capacities, maybe at least utilize somewhere as a CMO and then use that money for filing and regulatory purposes, which are a little bit much more. Because we talk about botulinum toxin, and then we talk about infertility, and then we talk about the oral vaccines in the future. All of them would be in a much better off that instead of putting money in our own capacity, we can always have I would say outside CMOs available, which can help us to take it to the next level. So that is the approach right now. Maybe in 1 year we will be more clear and we'll share with you more information.
Okay, understood, and thanks for the clarifications. Best of luck.
Thank you. The next question comes from Chintan Shah from JM Financial Family Office. Please go ahead.
Hi, thank you so much for the opportunity. So, Pranav, I had two questions. So, one is, if I look at our Indore facility, we are planning to go to regulated markets here. And please correct me if I'm wrong, but this is the first time would be, going under audit for this regulated markets. So, my question is the Indore facility ramp up, say, beyond FY27, beyond the 30, 40, 45% utilization, dependent on those regulated markets picking up, or do we think that even if that gets delayed or there's some issue and it doesn't happen, we have enough bandwidth to ramp this up without the approvals from the regulated market? That is my first question.
Yeah. So very frankly, when I mention those capacities, I'm only using for next year mostly Indian domestic business, both CMO as well as own brands, as well as we are expecting a huge hopefully in Q4 actually. So you have not been factored in my utilization for next year. Also, US are purely as a CM, because we also want to learn and evolve. We don't want to take any shortcuts. A lot of people are saying as we had 4 audits. I can do different companies out of the 6 audits are happening for the US market specifically, and they all be happening and happening. So I would again from putting any numbers be a different volume. That's too, I would say, preliminary for me to commenting on US right now for that facility. There are other, so answering a question, these 30% or 30 to 40% would be something which we wish to take care of the domestic and the semi-regular and the European and other markets except US and Japan as of now.
That is fair enough, Pranav. Just one clarification here. I mean, just excluding the US, suppose it doesn't happen, do you think there's enough potential itself in the domestic or semi-regulated markets for this Indore facility to ramp up, or we would be dependent on
so
regulated
even
markets?
Right now, if you see the order books are in such a way that I'm struggling in Navsari right now. We have seen almost a revenue plateau happening, because we have orders. Like I said, a UK order is lying with us, but we have not been able to capture in the last quarter. We will be doing partly in Q4 and partly in Q1 next year, even though I had to deliver that way back in December or maximum by Jan. So these are the challenges I'm already facing in Navsari, which would be, of course, easing off in the next 1.5 years with the thing. So answering your question, Navsari should be chock-a-blocked by if I start removing the domestic also. It should be export orders by the end of calendar year by around October to December 2025. And that is where we need that market also just actually not saying the capacity. We have and that will further increase in the next 4 quarters also because of the thing. So I'm assuming, and again I'll just ask Sumta sir just when we see on a standalone basis, we are assuming by Q4 it should eventually start breaking even, and then the actual margin should come. But I think we have considered these costs. Rumta sir, am I right? We have considered
Yes, we have considered all these costs.
Yeah. So I'm saying, because already that, if you see in the current P&L already, they have started hitting us from last 2 quarters itself.
Okay. Perfect. And now just one last question from my side. I mean, if you could just throw some light on the revenue contribution from a top 5 or 10 molecules, basically.
Sorry, can you repeat that again? I just got a call in the second. I could not hear you.
Yeah. Can you just mention what will be your revenue contribution from a top 5 or top 10 molecules?
So top 7, I just did it because we have seen an erosion happening there. So top 6 to 7 molecules contribute to almost 20 to 25% of our revenue as of now in various CMOs and all that. So that is something. I would say top 6 or top 7 contribute that. Others, let me get back to you because I don't have it I don't have offhand. I can get it sent to you.
No problem. No problem. That is good enough. Thank you so much, Pranav, for answering all my questions. That's it. Thank you and all the best.
Thanks.
Thank you. Next question comes from the line of Yash Tanna from iThought PMS. Please go ahead.
Yeah. Hi, Pranav sir. Thank you for the opportunity. Am I audible?
Yes,
Hello.
sir, please go ahead.
Yeah. So, I think one question has been answered. I just have one question. Sir, we created this subsidiary called Gufic BioSciences recently. So if you can share any developments that and what's our plan with this subsidiary. And also, I think you briefly mentioned about botulinum toxin for international markets, but have we taken a call not to take that international, or if you can throw some light on that as well?
So we had an opportunity some time back to take it international, and it was quite a good. Of course, the talks are still on, but I think we never say never but right now, just for the fact that because of the time which is there and our other like indoor and the domestic market as well as the US, I would say the validation batches and the European validation batches are taking a big part of the bandwidth. And also, if you must have seen, we just have got a new president of international business who has joined us, who has excellent regulated market experience, Dr. Rajshekhar. So our bandwidth is right now fully focused on getting these existing assets working to the best of the ability. If we would, of course, love to go to botulinum toxin international market, but maybe we feel it would be better suited to all of us that if we do it after 1 year, once we have these all other guns are blazing, and then we can start to ignite a new gun. So otherwise, it should not happen that the CEO also get occupied in this new thing. Of course, not me, more than me, actually, my CEO will get occupied in this new bandwidth of setting up a new facility for botulinum toxin. And we foresee that maybe in the year's time, there are certain assets coming up where we can actually go with our tech transfer and then start manufacturing rather than creating taking more debt or creating an asset on our own, which can be a little bit more, rather put that money in the regulatory process, the tech transfer, and use that facility to take our botulinum toxin. Right? So there are a lot of options we are exploring, and keeping in mind the company's bandwidth and our immediate, I would say, targets, we are taking it one day at a time. So let's hope we can share something good with you all in the future.
Right. Sure, sir. Thanks. That makes sense. And anything on Gufic Prime Bio? What's our...
So Gufic Prime Bio, basically, since there are, apart from botulinum toxin, other products also being made in terms of oral dengue vaccine and oral other vaccines of COVID, and I think now we have also started working on one more option. So those eventually would be, I would say, rooted in a different way because it's a subsidiary, because Dr. Balram Singh also has some plans of, I would say, raising capital, but it's in a very preliminary stage because there are certain things which we as Gufic as a company can take it to the next level, but at least to certain, I would say, clinical, roadmap maybe of a preclinical phase 1, phase 2, we can do it. Beyond that, how do we take it forward? We will always need external help and external, I would say, interest will drive it to the next orbit. So Gufic will have its limitations to drive a project except in the scientific way, because then there'll be more investments involved and there'll be more and more, I would say, other resources required. For that, we have created this vehicle, and as and when we get a successful phase 1 or preclinical and phase 1 and phase 2, we will start updating you all this better thing, which will be a good thing. So you understand, right? So we can't take certain projects through and through. There might be a time where we can just exit certain projects at the right time and then give it to the next person to take it to the next level, and then we start working on another R&D project.
Got it. Yeah. That's very helpful. Thank you, sir, and best of luck.
Yeah.
Thank you. Next question comes from Shrey Gandhi from CR Kothari Stock Broking. Please go ahead.
Thank you for the opportunity. I just have a small question regarding the macro environment. That the USA has been planning to put import tariff on pharmaceuticals as well. So do we see any impact on that considering our CMO segment from Indore vertical, which we are planning to go maybe next year or year after that?
To be very honest, we are very small, or we have not even, entered it. So right now, it will be very myopic of me to comment on this. I need to study more and I need to research more. But, and since as a CMO, I'm sure our clients, both Indian as well as international, would be more in tune with this than me. So at this moment, I will not be able to comment because I really have not much idea into this. So I will not be able to give you any structured reply.
Okay, and I have another question. Like, there was 6 crore revenue which we reported from the Indore facility in this quarter. Was it from own manufacturing or was it from CMO vertical?
Yeah, it was from our own branded. Like I said, right now, the first thing you can start is only own branded because other companies will wait for our 3 batches and then 6 months data for them to start. So till then, it will be own manufacturing. Even this Q4 will also be own brands and own manufacturing, and then hopefully, I'm surely from Q1, Q2, you will see CMO kicking in.
Okay, and how much do we expect in the next quarter from Indore plant?
Estimate. Again, it's a very forward-looking thing. So I'll just say that right now the start has happened. We hope that we can reach at least 2 to 3 times than what we did already in this quarter. So just give you an indication around that.
Okay. Thank you. Thank you for the opportunity.
Yeah.
Thank you. As there are no further questions from the participants, I now hand the conference over to Ms. Amisha for closing comments.
Well, thank you so much. I appreciate all of you joining us today. If you have any further questions, you can contact our IR, Mr. Avik Das. With that, we conclude today's call. Thank you.
Thank you. On behalf of Gufic BioSciences Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your lines.